Guys, welcome back to another video. We are in the beginnings of what could be a massive short squeeze that could change the entire trajectory of the stock from a downtrend to an uptrend. And in this video, I'll be sharing with you some of the key things that the CEO said right after the Envo L90 launch. There's some big important things that shows that NIO is actually a very different company than what it was a few years back or even last year. Okay, so the first thing is, of course, the Envo L90 doesn't actually have a sales target. Can you believe that? But instead of having a concrete sales target, because with sales target, you can push out crazy incentives and you meet the sales target, but then it might cost you a lot of money. So instead of that, Envo actually now has a margin target, which I think is much more reasonable. So you're able to really balance out the incentives and costs and all that kind of stuff, be successful, deliver lots of cars, but you're able to play around and do things that you probably, if it was just a traditional sales target, it would be very different. And some of the key things that the CEO said, NIO CEO willingly said, is that the cost, the cost savings have really been drastic. Okay, so one small example of this was during the Envo L90 launch event. Apparently, comments were turned off. All right, so before in different launch events that Neil had, you can do comments, but then that would require moderators for moderation, and you have to have that because there's like these kind of uh, dark companies that pay haters to sort of talk shit about NIO. And it's actually been exposed by NIO CEO that these guys, some companies, these dark companies, they get paid 30 million to 50 million RMB a year just to spread internet traffic about negative things about NIO, creating doubt amongst customers. So instead of dealing with all this BS, the moderators and moderation cost a lot of money, just turn off all the comments, right? So that's just one of the many steps that they're doing to save on cost. And a lot of people were surprised about the price of the Envo L90. Like, does this have like enough margin? Is it going to be profitable? And to answer that question, they've actually, it goes down to the whole core of NIO, right? They spent a lot of money on R&D, and the whole point of R&D is to trade R&D with long-term margin. So they've done a lot of research into being able to make the car cheaper, make the car lighter, and that's a key point. Remember, the Envo 90 is going to be the lightest three-row SUV out there, period. All right. So being lighter also means you're using less material. And this is all thanks to the R&D. And that in return, if you're using less material, that's less cost. So you're able to keep the cost, the bill of materials, much lower for this car. And another very big reason that NIO is now a changed company is that they've learned from their mistakes. So somebody asked willingly, with the ET5 and the Envo L60, what kind of mistakes have you learned, all right, that you guys will not do again? And let's be honest, willingly said that when they launched the ET5, it was really a revolutionary product. They were getting a ton of orders. They had a ton of orders, but because of the pace of things, they couldn't get the car to the buyer's hands. That has caused a lot of the orders to be leaked away, to essentially be canceled. And one core thing that he learned, and he said during this whole process, he had a lot of their top management employees were actually living in the factory to try to pump out the ET5s. And with this whole entire car manufacturing, it's a very long supply chain. If there isn't enough of one single screw, that could result in this car not being produced. So through this whole process, their team has learned a lot about supply chain management. And the whole entire thing with the ET5 and was like, when it's hyped up, the car's hyped up, you have a lot of demand, right? And then your suppliers aren't able to keep up with the demand. So the supplier adjusts their production to be able to produce more parts to meet this demand. But then by then, the hype has died down. And then you have this excess surplus of supply chain production that all of a sudden isn't really needed. So it's a delicate balance that it was a tough lesson for them apparently. And now they've learned how to really manage hype. Okay, so that's very key important thing. Manage hype, and also to be able to, with the supply chain, organize everything and make sure it goes smoothly, and that they're able to produce, and then make sure that if they do ramp up, that there's going to be long-term demand for that supply as well, because that's a key point for the supply chain, right? So the one important thing that you're actually seeing right now is managing hype. So a classic example with the Firefly, they launched a car, it was hyped up, and then after a while, a few months later, and then they launch the Bass version with battery rental. Now you can rent the battery. So this is rehyped, and that pushes the orders up again. So, that's one example. Another example with the 2025 versions, they launched a car, and then after a while, they launched the Champion Edition, right? Rehype things once again to create more internet traffic, essentially. And then with the ET9 recently, there's a Horizon edition of the ET9 that they just launched, unveiled. This is again sort of rehyping things, getting people more interested in this car, allowing, more and more demand. So now the metric that they're really judging everything on is return on investment. And for Envo especially, it's even down to the specific store. Is the store profitable? And for NIO in general, it's all about everything that they're doing. Is there a good return on investment that they're getting out of this? And one interesting that I've seen was Dr. Shinfei. He after the launch of the Envo L90, he looked at the stores. Some of the stores were doing live streams at 1 a.m. in the morning, right after the launch event. And it shows how hardworking some of these stores are. And it's not all the stores, all right? Some of the stores doing live streams at 1 a.m. Absolutely crazy. And it shows that it's multifaceted. They're trying all sorts of different ways to really push forward. And every store has their own sort of profitability metric. And if they're able to meet that, on the cost basis of the salaries, the rent, all that things versus the sales that they're able to do, the revenue they're able to generate. If that doesn't get met, it gets closed down, and it's called operational adjustments. And we're seeing a lot of that. People get fired, job cuts, so to speak. Some people saying, oh, NIO's doing massive job cuts. But on paper, yes, it looks like job cuts, but it's more like efficiency adjustments. All right. You're not suitable for the role. You're let go. Someone else that's better at that role will take that position. Or, like I said, in that return of investment, everything that they do has to be profitable going forward, even down to the little unit metric. Like everything that they do has to be profitable. So this is very, very interesting. They are really pushing forward towards profitability, and everything they're doing, Neil Seal talked about, it has to really benefit the core consumer, which is, I think, on the right path. So in my personal opinion, there's a very good high chance that NIO will be profitable in Q4. And this does mean that all the adjustments they're doing and everything has to kick in. So I think in Q2, when we get the Q2 earnings report, we're going to see some pretty good changes. All right, some pretty good colorful numbers. And then maybe in Q3's earnings report, whenever we get that, that's going to also look pretty nice, I think. So yeah, definitely stay tuned for NIO's earnings. I think right now it's changing. It's becoming better, right? As always, stay safe, stay healthy. Peace out.